Hi everyone, Ryan Dement here. Hope you're doing well. This is our second installment of our video newsletter. To say the least, we've been pretty busy this week. We actually launched our own real estate fund. We're excited about that, and there's some great things to come, so be on the lookout for those in your inbox. This week, I really wanted to talk about the things that we're doing differently in the actual industry. Not everybody is actually talking about note investing. Not very many people, if you want to be truthful about it. There's quite a bit of conversation around buy and hold and fix and flip. I typically don't hear a lot of conversations around note investing outside of my inner circle of people that I know that are other note investors. So this week I want to talk a little about what we actually do and all the time and effort we put into a file. And a file is a tape that comes from a lender. Typically, it's an Excel spreadsheet. What happens there is there could be anywhere between 50 to 1,000 assets on there. So each row is a single family resident. So we have to go through there, figure out which houses, which areas, which states that we want to buy, and then we start doing our due diligence on those properties. Once we figure out which ones we want to buy, we start the process of bidding on them with the lender. And of course, we have to wait for that bid to be accepted. And then once the bid is accepted, we go through a due diligence process to where we look through the BPO and make sure that we have the right appraised value against what our purchase price is. We also look at the deed and the actual title to see what's against the house, if there's any type of liens. And then the third thing is we just like to check the neighborhood out. Is it a neighborhood that actually works for others? And is it up and coming, or does it need some help? Whatever the case is, we try to find those items and match them all together. And then the other piece of it is pride of ownership. Does that homeowner want to stay? And we could typically tell by just going out and checking out the property. If it's abandoned, okay, that's totally different. But if you have somebody living in it and you can see that they're trying to take care of it, those are the people that we want to help. And those are the assets that we typically buy. We're not here to evict somebody. We're not looking to foreclose. We want them to stay in the property. And we have many, many different options for the homeowner to work with, whether it be a forbearance or a workout or payment reduction or interest reduction or principal reduction. I mean, there's a lot of different options that we actually can work with for the actual homeowner. We want to keep them in the house because that is the easiest route for us to actually exit the investment. And that typically happens on a short end of 9 months and typically on a long end, 18 months. So there's a wide range there, but it allows us to be able to work with the homeowner and work with you, the investor, to figure out which investments work best for you. We're here to work with you. We've done this enough times to know exactly what we need to do on each investment, whether it's trying to figure out on the front end whether we want to buy it or the exit strategy on the back end. We're not just a family-owned business. We have a core group of vendors that we work with on a daily basis that help us get to these outstanding results that come from what we've done in the last 4 years. Whether it be a 20% return or a 130% return or a 10% return, that's better than any other type of financial instrument that you can get out there. Yes, the stock market, it does go up, but unfortunately it goes down. So what are you doing? You're trying to preserve your capital at the same time of growing it. Well, if you're buying the asset right, the home, at 30 or 50% of the current market value, you're actually buying it correctly. So if the market does have a correction, like we're starting to see now, you're going to actually be in the positive. So let's say for worst case scenario, the homeowner wants to foreclose and they don't want to have anything to do with us. Okay, we go through the foreclosure process. Well, guess what? There's plenty of exit strategies out of that. We can actually turn around and sell it in a retail channel through a real estate agent. We can sell it on owner financing. We can actually rent it out. We could do a lease to own. We could actually fix and flip it. So there's many different options that we can actually do on a daily basis with these assets that we come across. It's not just a traditional buy and hold or fix and flip where you only have one exit strategy. We have multiple in our arsenal and we like to use them. But our number one thing is to take care of the homeowner if they want to stay in the house. That is the best way to exit the actual investment that'll allow us to be profitable and also give you a handsome return. So this week, it's all about giving you guys a little bit more of a background on what we're doing on a daily basis to buy assets, but then also to kind of give you guys a better understanding of what our real estate fund is going to actually do and what we're looking to accomplish with it. So look forward to speaking to you guys in the near future. Please be on the lookout in your inboxes from us for some emails, and then we'll be talking soon. Have a great day.